We now come to US dollar Japanese yen currency pair. And here I'd like to point out that we did have a news event today. It was the Bank of Japan's meeting. And the results of this meeting were the following. The Bank of Japan didn't change its monetary policy. It held off on expanding monetary stimulus. At the same time, the central bank pushed back the timing for hitting its inflation target. It is somewhere in fiscal year of 2018 now. The central bank has said that it will keep policy unchanged unless there are some severe shocks. And as far as we can judge, unless the dollar yen moves somewhere closer to 95 yen per dollar, then the Bank of Japan and Japanese government will do nothing, and the forex market nothing to change this situation. However, it is worth noting that Bank of Japan has made an emphasis on the downside risks which exist for Japanese economy. And it means that still the central bank is committed to its loose monetary policy, and this factor is acting in favor of the US dollar versus the Japanese yen. We can see that dollar yen is currently trying to get above 105 mark, which is our main resistance. If dollar yen managed to settle above this level, we will get higher to our next resistance levels. If we look at the levels provided by the weekly pivot indicator, we can see that these levels are 105.59 or 105.60, 106.46, and higher above 107. Support is located at the weekly pivot of 104.65 and lower at 103.77, 78, and 102.85. All in all, at the 4-hour chart, we can draw a support line through the recent lows. Actually, the support line which goes back to the end of September, and prices are still holding above this level. As long as they are, it means that the outlook and the overall trend, the medium-term trend for dollar yen is bullish. Last week, dollar yen managed to close above the previous resistance, which was situated in the area of 104.30. So the pair has managed to fight its way above 104.30, and even though its movements are consolidative, it slowly but surely is moving to the upside. For now, we can see that the 50-day moving average is ready to cross 100-day moving average at the daily chart, and this is a bullish signal saying that bullish positions are currently prevailing for this pair. The main news which took place in Japan have already passed the Bank of Japan's meeting, so now the main driver for the pair will be the meeting of FOMC and the US data releases. Non-farm payrolls will be important for dollar yen, and probably dollar yen is the best pair to trade on the US NFP release. Also, we had some positive figures from China. Chinese manufacturing PMI rose to the highest level since July 2014, and such positive figures from China make the market more positive and improve the market's risk sentiment, and the refuge currency, which is Japanese yen, is thus declining versus the US dollar. This is another factor in favor of US dollar Japanese yen currency pair, but we don't expect any big gains here. And I'd like to point out that any move of the dollar yen to the upside will be very gradual. And of course, we will be watching the mentioned support levels and mentioned resistance levels in order to build our trade on the daily basis.